Hey guys, Alex here at Inside, and today we have a very special broadcast for you, where today I'd like to share with you some nuances of the real estate market, or things that your agent most likely will not tell you. Why am I sharing this? Well, because I have many clients who sometimes have some certain distortions or illusions around the market that I end up explaining to them. And I thought it would be helpful to share with a wider audience so that overall you can feel more confident in making your decisions when investing here in the UAE. So, point one, renders don't equal reality. A trend that often happens in Dubai is that all developers have become very, very good at drawing fantastic renders. So things look really, really beautiful on pictures. And unfortunately, that doesn't mean that in reality, that project will look exactly or even close to what you see on the pictures. So just because you're being shown some architectural marvel where there is marble columns and water flowing throughout the building and unique shapes and designs, doesn't necessarily mean that that's what's going to happen. Because when we're talking about off-plan properties, the only way to sell them is to show some pictures. And so just because you see something doesn't mean in reality that's what will happen. At a minimum, it's important to ask the question, has this particular developer ever built anything like this or even close to this successfully? And where I say successfully, I mean have investors in that particular project realized profits or not? At a minimum, important to ask that question. Point two, just because you see something on the news doesn't mean it's a good project. Obviously, there are very well-known companies here in Dubai like Emaar and Damac, and I have clients who come sometimes and say, well, I want something like Emaar or Damac because they've seen the name on buildings, they've seen them in magazines, and even to extrapolate this further, I had a client recently say, I think this particular project is not good because it's not on the news. Otherwise, it would be on the news, right? Well, taking a step back, how often do you see Rolls-Royce or Harvard advertising? Almost never. Yet, they consistently sell out and they're performing very well as businesses and have a very high reputation, very well known for quality. Now, think about the motivations. Which company is more likely to need advertising? Is it a company who has difficulty selling their units? Or is it a company that consistently sells out and doesn't need to do this? So just because something exists on the news, just because you see it everywhere, doesn't necessarily equal that it's going to be a good investment. So for instance, there are some companies that are very good at building communities, but the quality of their buildings, of the individual units, is okay. And what does this mean for you as an investor? It means that there will be costs in the back end that you may not recognize right now. One of these is the apartment will not be able to rent out very quickly, so it's standing there unoccupied, costing you money every day. And two, as the owner, you'll be investing sometimes significant sums of money to fix something that has gone wrong or that is continuing to malfunction in the unit. As well as, let's not forget, the time and energy you're going to be investing into maintaining this apartment, which will be very different depending on which quality of build and developer you're choosing. So for instance, when you see advertising for buy a unit for 100,000 euro or own a penthouse for as little as, recognize that there is a reason these tactics are being employed, because they're not always reflective of reality, but they will draw your attention so that you can be offered something else potentially. And when it's significantly below the market average, there will be other hidden costs that you'll end up paying for anyway, sometimes 2 to 5 years later. And same goes for post-handover payment plans. Though this was popular during COVID times as a way to incentivize buyers, more and more developers are shifting away from this mechanism. So if you see something that's 7 or 8 years payment plan, recognize that there's probably a reason that this exists, and that reason is not always positive. There are always exceptions, but it's important to, at a minimum, ask the question why. Point three, you get exactly what you pay for. Sometimes people will see advertising for buy a unit for as little as €100,000, or here's an 8-year post-handover payment plan with only 5% down. Please recognize that there's a reason that these mechanisms are being used to incentivize you to buy, or at a minimum to contact that particular agency. Now, when the market standard is, say, around $170,000 for a studio, US, or the standard payment plan is between 2 and 5 years, when you see significant deviations from this, there's a reason that this exists, because oftentimes developers won't be able to sell their units otherwise. And so recognize you're going to be getting what you pay for. Also, sometimes, interestingly, things will be positioned as, here's a distressed deal. It's a burning opportunity you need to buy right now. Recognize that sometimes they're just words, and that price of a distressed deal is not even below market. So it's important to check the numbers and not be caught in the hype. Point 4, check the numbers. Recently, I had a client share a very funny story where another agency promised them 400% return on a particular investment over the course of just 2 years. Now, of course, we had a very good laugh at this at the office, and it's also unfortunate that things like this happen in the industry, because there's not a single project in Dubai, or probably anywhere in the world in real estate, that realized this kind of return. And by the way, if you know examples like this, send it to me. I'll find a way to invest into it for myself, and I'm sure everyone here will as well. So when someone is promising you a return that seems out of the world, there's a reason that's happening, and maybe it's important to ask the question, how is this substantiated? When has that developer built something where that happened? So realistically, good returns are going to be 20 to 30% plus, and we aim to provide realistic and arguably conservative estimates for our clients so that expectations match reality. Similarly, if someone is promising a 20 or 30% rental income return, I would ask, how is that substantiated? Where is there proof of this already happening from this particular developer? Odds are it doesn't exist. And so we realistically aim for 8 to 12% plus. And yes, it can go higher, but I would rather be transparent and honest with my clients so that we know what we're aiming for, and then capitalize on potential upside beyond that on a case-by-case basis. But at least it will be realistic. Point 5, financial motivations of your agent. Who pays the agent? Well, this is different between off-plan and secondary. So when we're talking about off-plan, the developer is paying the commission for the agent. And what's important to recognize is that this is different for every single developer, and sometimes different for every project within a particular developer. And so sometimes some developers will pay significantly higher than market average in terms of commission in order to incentivize agents to sell their buildings. Similarly, there's loyalty structures in place, or loyalty programs, where if an agency or an agent sells a certain amount within a particular developer's purview, they get additional bonuses. So it's important to question, what are the financial motivations of the person who's guiding you into this investment, and are they for your highest good or for their financial gain? Not to say they're mutually exclusive, but important to maintain clarity and transparency. Talking about the secondary market, there's an interesting dynamic here in the UAE that the seller doesn't always pay a commission. What that means is the buyer pays, and when you hear your agent tells you that it's 2%, realistically, you're probably never going to find out what the actual price of the property that you're buying is, because there will be an additional 2 to 4, sometimes even more percent baked in, called a top-up, that will be covering the other agent, and sometimes on top of the existing commission for your agent. Now, to, let's say, mitigate this, we honestly tell our clients that, look, it will be 4% for you as a buyer in terms of commission, because we're going to need to share this with the other agent, and so that we can see and have access to the best inventory, and we'll get the best price. Realistically, at least the client knows that there's no hidden costs baked into their price whatsoever, and they know exactly what they're paying for. Point 6, check the background and experience of your agent and their agency. Because this person is guiding you in this investment, it's important to ask, why are you choosing to work with them? And realistically, what is this person's background? Have they managed portfolios before? Are they thinking about your exit strategy? Unfortunately, sometimes this is not always the case, and it's not a given. So we just had yesterday a client call us who was sold 4 units in a popular project, and then when it came time for handover and they asked their agent to help them resell it, their agent blocked them and said, "We're not interested in working with your units," because they realized it wasn't a good project and they wouldn't be able to resell them. So unfortunately, this resulted in quite some tension for this client, and I don't want this to happen to you. So it's important for you to ask these questions to your agent, how they're going to work with you after the transaction. Are they going to communicate with the developer for you and help you if you need to delay payments? Are they going to help manage the payments and help you transfer either through bank transfer or crypto, or find other means to make sure that you're on top of your payment plan? How are they going to help you resell your property? For instance, in our case specifically, we work with our existing network of investors as well as partners around the world who are always interested in getting into good deals, as well as placing your property on all the most popular platforms for real estate here in the UAE. And lastly, we also create custom content that cover a particular project, a particular unit within a project, in order to help you realize the sale and then help you reinvest this money elsewhere and build a profitable portfolio. How do you feel when you're talking to this agent? How does your body respond? What do you feel emotionally? Do you feel a resonance with this person? And if so, then I would trust that and find someone you can form a long-term relationship with, because that's going to be important for you in the short and in the long term. And lastly, also tuning into what is this person's agency, what is their reputation on the market, do they already have case studies where they've helped their clients realize these particular sales. So to summarize, there is quite a few nuances in the market that you may or may not have been aware of, but at a minimum, I hope that this helps you become more confident, more knowledgeable about real estate here in the UAE, and what kind of questions you can be asking yourself to help improve your chances of success of investing here. Of course, if this inspires you, if you resonate with our approach of viewing things as a portfolio, of high professionalism and clarity and transparency, then please reach out to us and we'll be happy to support you in building your own investment portfolio, or if it's for living, to help you organize this particular transition. Either way, I look forward to connecting with you. My name is Alex, and I'll see you next time.